Welcome to the crypto bull run. So what are the experts saying about what will happen and what's happening now? Hi, I'm Mark. I'm from the Bitcoin Tutor. Thanks for joining me today. I want to cover a few really important headlines that I think have just come out recently that might help you put this crypto bull run into perspective. So the first one is from Charles Schwab Bank. And what they've told their customers is that if you don't hold at least 10% of your portfolio in Bitcoin, you will fall significantly behind. Now, this is a major change to have a massive brokerage and bank, actually, like Schwab Bank and Schwab Brokerage, tell this to their clients. You know, it wasn't that long ago where crypto was this crazy thing that only techies invested in. And now this is something that they're saying that all of their clients should consider. And they even put a 10% number on it. With my students early on, we used to talk about 2% or 5% of your holdings. Now they're talking 10%. So that's pretty amazing. Another one that came out is the holders of Bitcoin. Until this point, the biggest holder of Bitcoin was the founder of Bitcoin, who goes by the pseudonym Satoshi Nakamoto. And that was 1.1 million Bitcoins. But that was just surpassed. And it was surpassed just recently by all the spot ETFs. So if you combine all the electronic or the exchange traded funds that carry Bitcoin, and this provides a way for investors to invest in Bitcoin without holding it by investing in this ETF vehicle on the stock exchange. But what they've done now is they now own more than Satoshi Nakamoto. In fact, the latest estimate is they own about 6% of all the Bitcoin that exists today, which is just shy of 20 million Bitcoins. And in case you're not sure, the maximum amount of Bitcoins that'll ever be created is 21 million. So they're holding on to and growing quite a significant percentage of Bitcoin. The other holders, according to this list, are, of course, the crypto exchanges, especially the centralized exchanges, which buy and sell Bitcoin. And the biggest company is, not surprisingly, Michael Saylor's MicroStrategy. They own a huge amount of Bitcoin, and they keep buying in. So they know something. Usually the expression is you follow the money, and you understand who has all the research and the money to do the research, and what do they think about Bitcoin. And if they're investing billions of dollars, there's something there, of course. Finally, we have the U.S. government. The U.S. government has gotten most of their Bitcoin by seizures of illegal activities. This is another reason why I always tell people, not that you'll be seized, but it's always a good idea to hold control of your keys, because they can't seize it if you're holding it on a cold storage wallet. But if you hold it at Coinbase or Kraken or some other place, they can easily seize your cryptos just with a court order. Court order, they send it to Coinbase, and Coinbase seizes your cryptos and sends them to the government. It's as simple as that. So the expression, not your keys, not your coins. But this is interesting. So now with the Trump administration coming in the next 2 months, he's stated that he wants to hold on to that Bitcoin. In the past, the government would sell it for operating income, but Trump wants to hold that and, in fact, build a crypto reserve for the U.S. government. Another big government holder is the Chinese government as well. I'm not sure how they got all their Bitcoin, especially if they talk badly about crypto, but sometimes, people say one thing and do another. And there's great examples of that. I'll just drop a name, Jamie Dimon. Jamie Dimon has said that multiple times. It's junk, while behind the scenes he was buying, and his company was buying Bitcoin. One final note on this. It's not on the list, but BlackRock, which is one of the largest investment companies in the world, owns right now about 2% of all of the Bitcoin, and that continues to grow. So I wouldn't be surprised to see them among these top holders in the coming months and years. Another interesting thing right now is because we're now in the bull market, and we're moving past the point where people have hope, and now they have belief. and there's different phases of the market. And this belief phase means now we've seen it, a Bitcoin break 100,000 for the first time. I remember when I first learned about Bitcoin, it was only $30. And today it's 100,000 and growing. So it's a pretty amazing time for Bitcoin. So getting back to the market cycle, we're now moving out of the sort of belief like, okay, we believe it can happen again. And this happens every 4 years in Bitcoin. Like people say, can it happen again? Can it continue to grow? And so we're moving into what's called the thrill phase. And the thrill phase is where people really start getting excited about everything that's happening. And then from there, we have one more big explosive phase typically, which is the euphoria phase. And this is the time when we see the massive increases in prices of Bitcoin, followed by other cryptocurrencies. So 2025 is poised, if it follows the pattern, to continue that. And of course, this isn't financial advice. This is education. And if you look back 4 years and 4 years before that, and 4 years before that, this is what happened. And this is actually based on what they call the Wall Street cheat sheet. And this is the idea that all markets are emotional markets and they all follow a certain pattern. And so we'll take a look at that. We'll continue to track it over the next several months and into 2025. Another thing that people often have a problem understanding is when should they get out of Bitcoin? So assuming you've made an investment, and hopefully you have, when should you get out? And this is one of the hardest things to figure out in any sort of equity or any sort of holding, whether it's stock or a bond or an ETF. What is the high? At what point should you take some profits? And with crypto, given how volatile it is, taking profits is really important, because after that euphoric high, we often see a drop of 50% or more. And then over time, then it'll go back into another upcycle. But it's important to know this. So one of the most reliable ones is called the pi cycle top. And here on the screen, you'll see that when the moving average, the 111 moving average crosses the 350 moving average times 2, a little complex, but people have figured out that this works, the top is likely in. So this is how this works. So when those two moving averages cross, that in fact, when the shorter one crosses over the longer one, that usually means we're near a top. And you'll see that actually played out over the last two cycles for Bitcoin. So we're not there now, according to this indicator, and according to most experts, we're not close to that yet either. This is a good one from the Financial Times in London, which is one of the most read financial newspapers, along with the Wall Street Journal. They've been bad-mouthing Bitcoin and cryptos for, a decade. They came out with an apology. They finally came out with an apology because they said when they mentioned it back in 2011, Bitcoin was trading at $15.90. And now it's $100,000. So yeah, they're apologizing to their readers who could have made a literal fortune if they had just led them in and steered them in the right direction. So they weren't seeing the road signs ahead, which is crypto is here to stay. Finally, there's another great article here that might help you put everything into perspective. This person, Bitcoin for Freedom, wrote, "Buying Bitcoin with fiat is like buying water with sand in the Sahara Desert. It's the best trade in history. Insane that it's still possible." This brings up a couple things. One is, yes, obviously he's very bullish on the importance of Bitcoin and other cryptos. But he's also bringing up a really key point. At one point, this idea of fiat currency, government-issued currency that is not backed by anything but a promise, those days may be coming to an end. A lot of experts say that it is coming to an end. And at some point, US dollars and other fiat currencies, whether it's the euro or other currencies, just will not be allowed or will not be accepted for Bitcoin, will not be accepted for gold, and will not be accepted for other precious metals. So very interesting. When and how that would happen, I think we'd have to see a greater hyperinflation. to allow that to happen. In the short term, you probably will have to pay more and more and more dollars to get these things, gold, silver, and Bitcoin. But eventually could get to the point where the dollar and the euro become so worth less that no one wants to exchange something so full of worth as Bitcoin for something so worth less as the US dollar. Imagine what that would be like if that was the case. We're not there yet, but many people believe we're on that road. One final thing, as Bitcoin is hitting 100,000, by the time this even comes out, you might have seen a pullback. It's very likely there will be a pullback. In fact, every bull run in the crypto environment, in the crypto world, has always had a pullback. So we're now looking at breaking 100,000. We've done it. We're pulling back into the 90,000s as this video goes out. And there'll be much more upside, most likely coming. But there also will be a jagged ride up. So there'll be pullbacks, 10%, 20%, maybe even 30% before more buyers come in and drive the price higher again. So we'll see that until we get into this euphoria phase. And then typically what we see is the market then starts coming down. When will that occur? No one knows for sure. That's why I talked about the pi cycle top. I talked about that we're currently moving into this thrill part of the market cycle. So definitely keep an eye out. 2025 is going to be an amazing year of amazing highs and some really unexpected pullbacks. But stay strong. If you're in crypto, you're in the right place. And thanks for watching. For more information like this, please continue to subscribe, ring the bell icon. And if you have questions, feel free to comment below. Thanks.